Tesla's Q1 call ran 57 minutes across every finance channel. The $2 billion acquisition was in the document, none of them mentioned. I found it the next morning. Page 27, note 14 of the quarterly filing. One sentence, company name not given. If you hold Tesla, the call is not where this story ended. The same morning, Intel jumped 20% on the TeraFab story. The factory behind that story made $174 million from outside customers and cannot yet confirm production orders. But this $174 million in revenue creates an extra $200 billion in market cap, more than 1,000 times price to sales. 3 earnings calls in, the number that matters most is still the one nobody puts in a headline. On April 22, 2026, Elon spent the call talking about robotaxi Mouse, Optimus, and TeraFab. The $2 billion acquisition was not among them. The next morning, Tesla filed its 10Q. That is the quarterly financial report every public company is legally required to submit to the SEC. I went to note 14, subsequent events. Companies use this section to disclose things that happened after the quarter closed but before the filing date. One sentence. In April 2026, we entered into an agreement to acquire an AI hardware company for up to $2 billion in stock and equity awards. That is the entire disclosure. No company name, no description of the technology, no explanation of how it connects to Tesla's strategy. Not one word about it in 57 minutes on the call. The structure of the deal. Of the $2 billion, approximately $200 million is guaranteed upfront. The remaining $1.8 billion is contingent. It depends on the service conditions and performance milestone tied to the successful deployment of the company's technology. That last word, deployment. The $1.8 billion contingent on successful deployment means the technology has not been fully deployed yet. Tesla is paying primarily for something that still has to prove it works at scale. The bulk of the money follows results, not the announcement. What kind of company fits this profile in April 2026? Analysts who have reported on this filing point to 3 possibilities. A chip design firm working on custom AI silicon, which connects to Tesla's AI5 tape-out and the TeraFab roadmap. An advanced packaging company, which is one of the hardest unsolved problems in building a chip factory from scratch. Or an AI inference hardware startup whose technology is needed for Optimus or Cybercab at the volumes being described. None of this is confirmed. Tesla has not named the company. What is confirmed is the timing. April 2026, the same month Intel confirmed the TeraFab partnership on the 14A technology. The call ended. The filing arrived the next morning. The sequence of those events itself is a disclosure. Now, before we go into what Intel's earnings said, there's one number I need you to hold. On the Q1 call, describing the near-term TeraFab plan, Elon used this language: a research fab on the Giga Texas campus capable of a few thousand wafers per month. Hold it, we are coming back to it. If you want the full picture on Tesla's cash position this quarter, the SpaceX equity purchase, and the negative free cash flow guidance for the rest of 2026, that is the Q1 earnings breakdown, link below. Today we are covering what moved in the 48 hours after that call. On April 23, 2026, the morning after Tesla's call, Intel reported its Q1 results. Revenue $13.6 billion, beat analyst estimates by $1.2 billion. The stock jumped 20% in after hours trading. Intel's stock has more than doubled in 2026. Its market cap crossed $400 billion this week. A year ago, Intel was trading near $18 per share. On the earnings call, CEO Lip-Bu said this: "A year ago, the conversation about Intel was whether we could survive. Today, it is about how quickly we can add manufacturing capacity and scale our supply to meet enormous demand. That is a real shift. The direction has changed. I am not dismissing it." He also said, "I can think of no better partner than Elon Musk." Then the number that does not match the story. Intel Foundry, The division that makes chips for customers outside of Intel reported $174 million in external revenue this quarter. Intel's market cap crossed $400 billion this week. The chip factory driving that valuation made $174 million from outside customers last quarter. Intel's total foundry division reported $5.4 billion in total revenue. But the large majority of that is Intel manufacturing chips for itself. Intel is essentially its own biggest customer. The external number, actual revenue from being a chip maker for other companies, is $174 million. And Intel Foundry reported a $2.4 billion operating loss in quarter 1. Some of you are already thinking the turnaround is real regardless. The revenue growth is real. The direction has changed. That is a fair read. But a market cap does not cross $400 billion on $174 million in quarterly external revenue unless the stock is pricing in a future that does not exist. Both of those things are true at the same time. Now the detail that shifts the timeline picture. When Intel joined TeraFab on April 7th, the process being discussed was 18A. On the April 23rd earnings call, Tan confirmed something different. Tesla will use Intel's 14A process, not 18A, 14A. 14A is more advanced. That sounds like an upgrade, but there is a specific reason the timeline matters here. Say I opened Daniel's Burger Shop and I invited a supplier to evaluate my kitchen. My kitchen is 50% complete. The recipes exist, but the equipment is not fully tested. The supplier can come in, taste the food, and tell me they are interested, but they will not sign a long-term supply contract yet. They need to see the kitchen at 90% complete, fully equipped, tested at real volumes. At 90%, they decide how many burgers to order and whether to tie their supply chain to mine. That is what a PDK is in chip manufacturing. PDK stands for Process Design Kit. It is the complete set of rules and tools that chip designers need to build a product on a specific manufacturing process. Think of it as the full blueprint for the kitchen. At PDK 0.5, the kitchen is halfway ready. Designers can evaluate. They cannot commit to production. At PDK 0.9, the kitchen is nearly complete. That is when customers decide which products to build, how many chips they need, and how much capacity to reserve. Intel confirmed the Q1 call that 14A is at PDK 0.5. They are targeting 0.9. Until 14A reaches PDK 0.9, no customer, including Tesla, can confirm production volumes for TeraFab. Tan's exact words on customer commitments: "My style is under-promise, over-deliver. We have no plan to announce the customer unless the customer wants to announce it." Tesla announced itself. The contract terms remain undisclosed. There is still no SEC filing from Intel on the TeraFab partnership. If this breakdown is useful, hit like and subscribe. I got 3 layers tip every week. 14A requires a specific machine to make chips. That same machine from the original TeraFab video. Picture Daniel's Burger Shop needing one specific machine to make its signature burger. One factory in the entire world builds this machine. It costs $380 million. There is a 2-year waiting list, and that factory shipped 2 of them to the entire world last quarter. That machine exists. It is made by a Dutch company called ASML. In chip manufacturing, it is called a high-NA EUV lithography system. There is no substitute. Without it, 14A chips cannot be made. This is the 3rd earnings call in the history. ASML reported on April 15, 2026. In Q1 2026, ASML shipped 2 high-NA EUV systems globally. 2 machines shipped to the entire world last quarter. On April 23rd, the same day Intel confirmed Tesla will use 14A, TSMC issued a statement. TSMC makes chips for Apple, Nvidia, and most of the AI industry. They said they do not need high-NA machines until 2029. The world's most advanced chipmakers said the machine TeraFab depends on is not urgent for them for another 3 years. ASML's CEO said high-NA adoption could accelerate if demand tightens, but that it is too early to confirm a faster timeline. There's one genuine positive in ASML's numbers. China's sales fell from 36% of ASML's revenue in Q4 2025 to 19% in Q1 2026. US legislation is moving that could restrict those sales further. When ASML loses China as a buyer, more capacity becomes available for Western customers. Intel benefits from that. But the restriction affects a different type of machine. The freed up capacity is for older equipment. TeraFab needs the new equipment. Those are not the same pool. The machine problem has not disappeared. It has moved one step upstream. The question is no longer whether Tesla ordered from ASML. The question is whether Intel has ordered enough high-NA machines to build TeraFab at scale. ASML is shipping 2 per quarter globally. Intel is currently the primary customer for its own most advanced process. That answer is not visible in any public disclosure. And the factory those machines would serve, the one announced in March at $25 billion and 1 million wafer starts per month, the near-term version is a few thousand wafers per month. We are there now. A few thousand wafers per month, Elon's own language on the Q1 call. A research fab on the Giga Texas campus, approximately $3 billion, capable of a few thousand wafers per month. The March 2026 announcement, $25 billion, 1 million wafers starts per month. A few thousand versus 1 million, there is roughly a 300x difference in scale. The objection writes itself. Every serious chip fab starts with a research phase. TSMC did it. Samsung did it. Intel has done it. That is exactly right. The sequence from research to production is normal. The point is not that the sequence is unusual. The point is that the announcement did not describe a research phase. It described a $25 billion factory. The research fab came out 6 weeks later on an earnings call. Back to Daniel's Burger Shop. I told you I was building a restaurant that would serve 1 million burgers a year. 6 weeks later, you asked for an update. I said, we are starting with a test kitchen first, a few thousand burgers a year. Still going to get 1 million, just starting smaller. That is not a failure. The test kitchen is probably the right call before committing $25 billion. But if you bought shares in Daniel's Burger Shop based on the 1 million burger announcement, what are you holding today? A test kitchen with a 1 million burger plan, no confirmed machines, no signed contract, a manufacturing process at PDK 0.5. And that is not the first time Elon has described something as starting small and scaling up later. Tesla Semi was first announced in 2017. Elon promised deliveries in 2019. The first actual delivery arrived on December 1st, 2022, 3 years behind the original promise, to PepsiCo. In February 2026, Elon posted on X, Tesla Semi starts high volume production this year. On the same Q1 2026 earnings call, where he described the research fab, he said Semi mass production was coming this year. Then he said meaningful revenue from it would be more likely in 2027. The same call, the same structure, small start, scale to follow, timeline to be updated. I'm not saying TeraFab ends the same way. The Semi is being built. The trucks exist. The Nevada factory is built. The point is simpler. When Elon describes something as starting small with a larger scale to follow, the distance between these two things is constantly longer than the initial framing suggests. The $25 billion was in the announcement. The few thousand wafers per month was in the earnings call. One of those is still in the news. The other one is in this video. I want to hear from you. When you see the gap between the March announcement and what the Q1 call actually described, does that change how you read the $25 billion number? Or does the research-first approach makes the long-term division more credible to you? Tell me in the comments. In the original TeraFab video, I left 3 things to watch. Each one has moved. Signal 1 was the ASML equipment order. Watch for a confirmed order from Tesla as the most concrete sign TeraFab is a real construction project. That signal has changed shape. Tesla is not ordering from ASML directly. Tesla is using Intel's 14A process, which means Intel orders the machines. The dependency moved one step upstream. Machines availability has not resolved, it has relocated. Signal 2 was the capital raise timing. Tesla has now guided negative free cash flow for Q2, Q3 and Q4 of 2026. The full picture of that is in the Q1 earnings video, linked below. That signal has not resolved. Signal 3 was Elon's language on earnings calls. I said to watch how he describes TeraFab on the next two calls. The first one now has changed. On the Q1 call, 32 days after the announcement, Elon said TeraFab was still working out the details, and that it will have complexity because both Tesla and SpaceX shareholders and boards have to be served. That is the language the original video said to watch for. It arrived, not a reversal. The first time he said out loud on a public call that the structure is complicated. When I found that sentence on page 27, I went back and read note 14 3 times. A $2 billion agreement. One sentence I kept reading, expecting the next sentence to name the company. There was no next sentence. I've covered TeraFab across 3 videos now. After this one, I am not less certain about the direction. I'm more specific about which part of the picture is still missing. 3 things I'm watching from here. 1. Whether Tesla files an amendment that names the AI hardware company and describes the technology. That is the moment the $2 billion becomes a strategy, not a sentence. 2. Intel's 14A PDK reaching 0.9. That is when production commitments become possible. Until then, Tesla's use of 14A is a plan. Watch for Intel's Q2 earnings call for a PDK update. 3. The first physical construction permit or equipment order tied to the research fab on Giga Texas campus. That is when the clock actually starts. Tesla's earnings call ran 57 minutes. Elon said nothing about a $2 billion deal. The deal appeared in a footnote the next morning. The people who read the filing before the analyst summaries published had information the call never gave them. The earnings call is what a company chooses to say. The quarterly filing is what the law requires them to disclose. If you have been relying on the call, how much of the picture were you actually working with? If this gave you a clearer picture, hit like and subscribe. I go 3 layers deep every week.